Hey traders, welcome back to another video. Thanks for tuning back into my channel. Sorry for the delay between videos. I was on holiday for a couple of weeks, but I'm back now and I'm excited to show you guys another TradingView strategy. So today's strategy is a daily time frame long only mean reversion system designed for US equities. That's what I originally designed this system for, but it does work on all markets. It's not necessarily profitable on all markets, but this system should work on any market you apply it to. But when I initially designed it, I have been using the Russell 2000 as my sort of in-sample data set for developing the system. So the system was originally created in Amy Broker. As some of you may know, I've been learning how to use Amy Broker to backtest more sophisticated systematic trading systems. And this is a system I developed in Amy Broker. I've been testing and developing in Amy Broker, and I've converted the code from Amy Broker's language into PineScript because I think this is a really cool system. It's quite simple, and it will be a great way to demonstrate some features in Pine that I haven't demonstrated yet, such as using limit orders to enter positions. So I haven't finished optimizing the system. I haven't finished the entire development and backtesting process. I'm about halfway through that process at the moment, but the system is profitable, at least according to my initial testing. Let me bring up some trading results here. So we have a single run backtest here on the Russell 3000 using 50% margin or leverage, so I can trade double my account balance. And according to a 20 position portfolio where I'm trading 10% of my equity per position, it had a roughly 20% annual return with a drawdown around 20%. Not fantastic numbers, but also not too bad. So there is definitely potential to this system. It has a 57% win rate and over 6,000 trades. So it seems pretty robust. I've done a little bit of Monte Carlo testing on the system just to see what the distribution of results are over, slightly randomized data sets and entry criteria, that sort of thing. And it seems pretty robust. It definitely needs some work before I would actually put real money at risk using the system. But it's in a decent enough position now that I feel comfortable sharing my idea and my code with you guys. So this system was inspired by information I've learned from Nick Raj. As many of you will know, if you've been following my channel for a while, I've been enrolled in a mentorship program with Nick for about a year now. And I've learned tons and tons of incredibly valuable information from Nick. If you've never heard of Nick, go and check out his chat with traders interviews. They're fantastic. I'll leave a link in the video description. But basically, this system is attempting to buy healthy stocks experiencing short-term sell-offs. So right here is a perfect example of what this system is designed to capture. So what we're looking at here is a 200 period EMA. This is my directional bias filter. So I need the market to be trading above this long-term moving average before I even start looking for trading signals. The second blue line here is a 20 period EMA. So we've got two EMAs here, a 200 period EMA, a 20 period EMA. And you can see these upper and lower lines. These are an ATR stretch from this middle EMA. So what this is officially called is I can't even say it, Keltner bands. So Keltner is a trader who invented this technique. And we're just simply subtracting, with the default settings, a 1 ATR distance from this central moving average. And this gives us basically volatility bands. It's kind of like Bollinger Bands. But instead of using standard deviations, we're just using the ATR. I did try using Bollinger Bands with this system when I initially started testing the idea. And from my testing, Keltner bands just seem to work better. So I've stuck with them while developing the system. I'm also not a mathematical minded person. So I find an ATR and moving averages just easy to wrap my head around than standard deviations and all of that sort of stuff that I'm still admittedly learning, and not that proficient with my understanding of that sort of thing. I come from a musician background, so when it comes to me developing trading systems, I'd like to keep it simple so that my dumb mind can wrap my head around what I'm doing. But the good news is, for people like me, you don't need to be that advanced with your systems in order to develop profitable systems and strategies. So anyway, we're using Keltner bands, 1 ATR stretch above and below this central moving average. The upper band I don't actually use in my system. I'm only drawing it there just for reference purposes. That's why it's quite faint. It's like a 50% transparent gray color. What we really are focusing on is this middle blue band, this green band, and this red moving average, long-term filter. And what I want to happen before I enter a trade is I want price action to be trading below this lower band, this green band. So I want price to be trading away from the mean. And I define the mean in this system as this 20-period short-term moving average. So long as the market is trading above this longer-term moving average, I consider this an upward trending stock. And when it trades below this lower band, I'm hoping for it to revert to the mean, which is our central moving average. But I don't just buy because price has closed below this lower band. I tried testing that. It didn't seem very profitable. So what I've done, this is a technique I've learned from Nick, is I'm using an ATR stretch to place a limit order to enter my positions. So as soon as price closes below this lower band, while trading above the long-term moving average, I place a buy limit order, 1 ATR from the low of that bar, so that on the next day, if price action trades down and hits that limit order, I enter long on this market, this stock. And so you can see here that we generated a buy limit order for this day here. On that next day, did not get filled. Price did not trade that low. But then on that following day, we generated another buy limit order, 1 ATR from the low. And on that next trading day, it did in fact get filled by price. We went long. And then my exit criteria is either if price continues lower and closes below this 200 EMA, if that happens, I get out and that's my stop loss. If that does not happen, what I wait for is price to revert to the mean. And the way I define that is by having the high of a daily bar touch our 20 EMA. So on this bar here, price touched the central moving average. And on the next bar's open, we exit our position for a small but reasonable profit. And if you do that over and over again, over 84 trades on this particular market, Southwest Airlines, we can generate a decent return. So we've got 1,000% return over however many years of trading this stock and a 26% max drawdown. Not too bad. That's a comfortable drawdown for me. And keep in mind that this is trading 100% of our equity on this market. What I would normally do, and what I'm doing in Amy Broker when I'm developing the system, is I would trade this on a portfolio of stocks. So I would trade 10 to 20 stocks at a time. That would be my max open position count. And so these numbers would reflect on a fraction of my overall account balance. So maybe I would have about $100,000 invested in the system. So I would have a 26% max drawdown on this market on $10,000 worth of my overall equity. And these numbers would be sort of averaged down across multiple markets. And so this would just be a microcosm of the overall system, the overall portfolio. So keep all of that in mind. So now that we understand what the system is doing, let's break down the source code. It's not too complicated. And then I'll give you some final thoughts at the end of the video. Okay, so let's get coding. What I have here is a essentially blank strategy script. I've just titled it ATR Reversion System. We've got overlay set to true so that we're drawing over price action and not into our own indicator box. We have initial capital set to 100,000 US dollars, I believe. Base currency default. I might actually define my base currency here as well. And I've already forgotten which parameter that is. Currency, I guess. Currency equals currency.USD. And by the way, the TradingView team have released a really cool update to the Pine editor. And now the editor runs on the same infrastructure software as Microsoft Visual Studio. If you've ever used that, it's quite a fun editing program, which I don't often use the word fun to describe a text editor, but it's really convenient, really efficient. So now the Pine editor has some really cool features that we'll go over in today's video as well. Nothing major has changed, but we have some quality of life improvements and things that make coding more efficient. We'll cover some of those throughout the video. So we have overlay set to true. Our base currency is US dollars. Our initial capital 100,000. Our default quantity type is a percentage of equity. This is our position sizing. Our default position sizing type is a % of our overall account balance. And the default value or position size is 100% of our account balance. So the very first trade we take, we'll invest $100,000 into that trade and then so on. The commission type is set to commission cash per order. So when we buy I pay $9.95. When I sell, I pay a flat rate of $9.95. That's the self-wealth broker fees. I use self-wealth to operate some of my equity trading systems. I also use Interactive Broker, and they operate a little bit differently. They use it's like different brackets depending on your position sizing. So I think the default one I normally pay is about 0.005 cents per share. But for today's lesson, I'm going to keep things simple. We're just going to go with a flat commission rate of about $10 per trade, $10 US per trade. So those are our default parameters. The next thing to do is get some user input. I'm just going to copy this code over to save time since it's not that important what we're doing here. I'll tidy up these a little bit to make them easy to read just by indenting everything. It's a new habit I've gotten into that I quite like. It makes the code easy to read. So what we're getting here is our long-term EMA, so a 200 period EMA by default. Our short-term EMA, which is a 20 period by default, a ATR period, which is 5 by default. So we're calculating the ATR based on the past 5 daily bars. Our ATR band distance is a multiplier of the ATR. By default, it's set to 1. Our ATR buy stretch is the stretch from the lower band that we place our buy limit order at. That's also set to 1 ATR by default. Then we have which band to sell at. So this is our mean reversion sell point. By default, it's set to the middle band, which is our short-term EMA. And the price value here, I underscore sell source, short for input underscore sell source, is a price source, and it is the high of the bar by default. So when the high of the bar touches our central moving average, the 20 period EMA, I consider price to have reverted to the mean, and I exit on the next bars open. So those are our user inputs. The next thing we need to do is get our indicator values. Paste that in there. So we're getting our long-term EMA using the ta.ema inbuilt function. We pass in the price source we want to calculate our EMA on and the length. So that's 200 by default. And our short-term EMA is 20 by default. And then we get our current ATR value. The next thing we need to do is get our ATR bands. So I'll type this out, get ATR bands. So we need ATR band top. And now I can demonstrate some of the cool new features of this new editor. See, when we start to type, we get all this stuff popping up. At first, it's overwhelming if you're new to Pine, but it's actually extremely efficient and convenient what this pop-up is, and I'll explain how to use it in a second. But we have ATR top and bottom. So to calculate the ATR band's top, we need to add our ATR band input to our central moving average. So to do that, I need to reference our EMA short and see how this has popped up. I can just simply hit tab now and it will automatically fill that out, which makes coding in Pine so much faster than it used to be. You used to only be able to autofill built-in functions, but now we can reference even our own custom variables and things like that. So it's really cool. Makes coding in Pine a real pleasure, to be honest. So we need to add our ATR value, the current ATR, multiplied by our input ATR band. So that's this input here. So 1 ATR by default, but we can adjust that in the settings and we can see how that affects our strategy performance. For the lower band, the one we actually use to reference for our buy conditions, we need to subtract the same values. So EMA short term minus the ATR value multiplied by our ATR band. That gives us our two bands. So before we continue, let's draw all of this to the chart so that we can see what our script is actually doing. So the first thing we're going to do is plot our EMA long term. I'll give it a title of EMA filter. This is our filter for filtering out trades that we shouldn't take when price is trading below this EMA. I'll set the color to color.red and the line width to 2. You can see as I'm typing this out, it actually references which parameter we're working with, which is really cool. It also shows the color that we'll be drawing onto the chart when I save this code. So little things, but they do add up to make working with Pine just so much more efficient and easier. We can actually change the color here with a click of a mouse. Really cool new feature. The next thing we're going to plot is our EMA short term. I'll call this ATR band middle, and I'll give it a color of color.blue, and then I'll just copy and paste the other plots over to save time, since you get the idea now of what I'm doing here. So we're plotting the EMA long term, the EMA short term, or our middle band, we're plotting the ATR top and bottom, and then we are going to plot our limit order, the price that we are going to place our limit order, but we haven't written that code yet, so I'll comment that out for now, and we'll add that in later. But now if I save my code, we should be getting our core indicators drawing to the chart. We have our central moving average, the two bands, and our long-term price filter, directional bias filter. So when price is trading below this, the system does nothing. It's a long-only system, since stocks, especially US stocks, tend to trend upwards over time far more often than they trend downwards. This system is taking advantage of that overall directional bias. And then we're just buying short-term weakness in stocks that are trading above their long-term moving average. So now we have everything we need in order to combine this information to create our buy and sell filters or conditions. So to do that, I'm going to first define my price stretch variable. So that's just going to be a float or a price value. And I'm going to call this buy limit price. And I'm going to initialize it as NA, or not a number, nothing, null to begin with. And then we'll reassign this value later to our actual buy price once we've calculated that. So the next thing we need to do is check our setup conditions, or in other words, is the bar close below the ATR band, the lower band, and is it above our long-term EMA? Pretty simple entry criteria for this system. So I can create a new variable here called setup condition, and this will be set to, is the current bar's closing price lower than our lower band, our ATR band bottom, and is the low of the current bar greater than our EMA long term? So price is trading above the EMA and below our lower band. So it's in this sort of zone here. This is what I consider to be trading away from the mean, and we are looking for price to have a sharp sell-off and then revert back to that mean. That's what this system is attempting to capture. So I'm getting a little bit ahead of myself here, but the next thing we're going to do is clear any pending limit orders. So when you place a limit order using the strategy tester in Pine, that limit order stays there indefinitely until it gets filled, basically, or canceled. So what I'm going to do here, before we even place the limit order, is we're going to cancel any pending limit orders using the strategy.cancelAll function. So if we have a limit order that has not been filled yet, we cancel that immediately on the start of each new bar. So if the limit order was not filled on the previous bar and it was placed on the previous bar, we just cancel that order because we don't want the limit order staying on the chart indefinitely. If it doesn't get filled the next day, then we basically, the trade's gone. And we just keep repeating the process, waiting for the next bar to exceed 1 ATR from our lower band. And that's how the system works. So now that we've got all our limit orders cleared, we have all our entry criteria set up and ready to go. The final thing to do is enter and exit our positions. So to enter our trades, I'll just say here, enter trades on next bar after our setup condition is met. Our setup criteria is met, which is this line of code here. So I'm going to use an if statement here. If setup condition is true, and then we need to tab to indent within the scope of this if statement. Otherwise, we won't compile. This script will give an error if we don't do this. So if our setup condition is met, we need to calculate our buy limit price. So I'm going to set buy limit price to the current bar's low, and then we need to subtract the current ATR value multiplied by our ATR stretch. So this is the stretch from the lower band that we want to place our limit order at. By default, it's set to 1 ATR. So basically, once price is trading below our lower band, we place a buy limit order 1 ATR below that lower band, below that bar's low. And we're hoping for a sharp sell-off like this bar here, followed by a quick reversion to the mean. That's the edge that this system is trying to capture. So now we need to strategy.entry. We use this function to enter our position. We need to give it an ID. So this is a long only system. So I'll just call this entry ID long. And then we need to tell it which direction we are trading in. So I'll just say here strategy.long. And we now need to specify some of these other parameters. You can use stop to enter a buy stop above price action. You can use quantity to set your position size. And OCA stands for one cancels all. I'll cover these in a different video. That's on my to-do list pretty soon. It's been requested a few times to show how this parameter works. But for today's lesson, we are focusing on limit. So limit is a buy limit price. So we need to specify our limit as this variable here that we just calculated. So the low minus 1 ATR is our buy limit price. Now that we've defined buy limit price, we can uncomment this code here. And now this will draw a little cross to identify which price we are placing our limit order at. So we are now entering our positions, but we're not exiting them yet. So we need to add a couple more lines of code here. The first thing we're going to do is, because I've defined in the settings menu this option here that allows the user to select which band to sell at and which price source to reference, we need to do a couple of things here. The first thing we need to do is get sell price, get which price we are referencing as our mean, our average that we are reverting to. I'm going to use a switch statement here to define this value, sell price, because it's just a little bit more efficient than using several if statements. And how this function works is we need to pass in a value. So I'm going to pass in my sell band input, which is this setting here. So we're passing that into our switch statement. And then the syntax for this switch statement is to simply say, is sell band equal to this value, top? If so, then we want to reference our ATR band top price value. Otherwise, if it's not top, we check, is it middle? If it's middle, then we set it to our EMA short term. And then finally, if it's bottom, then we set it to ATR band bottom. And I'll indent these to make it a little easier to read. And that's it. We now have our sell price variable defined. Depending on which setting the user has selected here, that will dictate which value gets selected as this variable's value. And finally, we can exit our trades. So the criteria for exiting our trades on this particular system is if our price source, which is this parameter here, the high by default. So with the default settings, we're going to check, is the current bar's high greater than or equal to sell price, which is the variable we just defined here. So depending on which one we've selected will dictate which sell price we are looking at. So by default, it's the middle band, our short-term moving average, the 20 EMA. So by default, this would be saying, if the current bar's high is greater than or equal to the 20 EMA, or price has closed below our long-term moving average, remember that's our stop loss. So if the current bar's closing price is less than EMA long-term, or our red line, then we need to exit our trade, either for a profit, hopefully. Not always. This condition will not always mean that we're exiting for a profit, because price might have trickled lower and then touched the 20 EMA after we bought higher than that EMA. It doesn't happen often, but it can happen. So this will usually exit the trade for a profit or a small loss. This, on the other hand, is our sort of fail-safe. If price just continues plummeting lower, we want to exit at some point. We don't want to hold on forever until price comes back up to that 20 EMA, because who knows when that might happen once the 200 EMA is breached. So if price has touched our 20 EMA or closed below our 200 EMA, we call strategy.close, and this function will close any open orders. We need to pass in the ID of the order to close. In this case, that's long. That's the only order type we have open. So pass in long there. And this is optional, but I'm going to add a comment here. Comment equals exit trade. The reason I'm doing this is because otherwise the strategy test has a really long label for exiting your long trades. I'll show you what I mean in a moment. That's our script completed. We have finished writing all the code we need. Hopefully I haven't made any mistakes. And when I save this, it should compile, and we should have that first trade popping up here. There we go. So I'll show you what I mean with this comment. If I get rid of this comment, which you don't need to include, but if I get rid of that, this label up here, it just clutters up your chart when you have a lot of trades in a short period of time. So I like to include this comment just to tidy up my charts a little bit. Just a matter of OCD preference. But here we go. So let's go over this one more time. We have our 200 period moving average and a giant drawing tool. Don't know what happened there. 1 second. Hit the wrong hotkey. So again, we got the 200 EMA. This is our filter. Price must be trading above this red line. Then we have our short-term moving average, the 20 EMA. Price must be trading 1 ATR below that EMA. So price must close below this green line. And then these green dots here, or crosses, are our buy limit orders. So on this bar here, we closed below the band and we placed a buy limit order, 1 ATR below the low. It was not hit on the next bar. And so we canceled our pending orders on this bar. And then we repeat the process. So this bar also closed below our green line. So our buy conditions are still met. So we place another buy limit order, 1 ATR below the low. And this time on the next bar, it was actually filled by price action. And we entered long when price came down and hit our buy limit order. If this bar had gapped down lower than our buy limit order and opened down here somewhere, let's say this was a green bar, and this was the open, then our entry price would actually be the open of this bar, not where we placed our buy limit order, because when the market opens, if it's trading below our buy limit order, it's basically giving us a better price than we wanted. And so our broker would enter us long down here instead of up here. It doesn't happen often, but it can happen. It's not a bad thing because it just means we're getting a better price than we wanted. And oftentimes a big gap down will be followed by a short-term rally back to the mean. And so quite often when that does happen, unless there's a steep sell-off like during the COVID crash and price just plummets through our 200 EMA and stops us out for a loss, we'll usually get a nice snap back to the mean after that sort of price action. And so that's completely fine with the system. In this case, price opened up here, traded down throughout the day, eventually exceeded our buy limit order and then closed up here. And then on the next few days, we sort of plateaued here. We consolidated for a couple of days, and then we had that reversion to the mean. Price tagged our upper moving average, and we exited on the next bar's open for a small profit. So that's our script completed. Before I wrap up this lesson, obviously the source code will be in the video description if you want to play around with it yourself. But let's go over some of these settings and see how they affect this system. So first of all, let's try seeing what happens if we change sell at band to the top band, this gray band. So if I hit top, now we exit all the way up here. So we still enter down here, but now we hold on to our trade much longer. It's not really a mean reversion trade now because we're exceeding the mean, the 20 EMA, by quite a bit here. So this is now more of a pullback system that's trading trend continuation setups just by changing that one parameter. Another thing we could do is change the band to the lower band. Now this is a more conservative mean reversion system. Now the system is entering long on this bar, and then the next bar tags our lower band. And so on the bar after that, we exit at the open. So that's a more conservative approach. It can still be profitable. I found in my testing that it, over the Russell 3000 universe of stocks, it's still profitable, but just not quite as much as the middle band. The top band is a little bit too aggressive, and I have found that it increases the drawdown without increasing the return much. The middle band is the sweet spot for this sort of system I've found, at least with the default parameters. And so that's what I use. I have also played around with the price source. That's why we have these two inputs while I'm developing the system. Once I decide which parameters best suit the system, I will hard code this and you won't be able to select it when I finish my script in Amy Broker. But if you want to, you can play around with different price sources. So for example, we could sell after a close above the 220 EMA instead of just touching it with a high. So that's another option for this particular system. On this particular stock, it performs pretty similarly to referencing the high. So if I reference the high, pretty much same drawdown, a little bit less profit. But obviously this is cherry picking and data mining one single stock. You'd want to see how this performs on multiple stocks, preferably hundreds of stocks, if not thousands, because the nature of the system doesn't take that many trades. So we need a larger sample size to be able to dictate whether or not this system is performing acceptably within our risk metrics. So we want the system to trade with a max drawdown that we're comfortable with, while also producing a profit and a win rate that we're comfortable with and that is acceptable to us. Anyway, that's it for this system. I'll just quickly run through a few markets here. So this one wasn't that all. Neither was this one. This one was not profitable at all. This one was basically break even. A little bit profitable. Only took 3 trades on this one. This a bit better. 60% return with a 10% drawdown. 40% return with a 60% drawdown. It's pretty rough, but again, trading over a large portfolio of stocks, that wouldn't be as bad. 86% return with a 28% drawdown. 34% return with a 6% drawdown, but only 9 trades. So you get the idea. We need a larger sample size in order to determine if this system is profitable or not. Netflix, about 130% return with a 30% drawdown. Over multiple years and multiple stocks with a larger portfolio of positions, the system would give you results much closer to what we see here, where you can see that over the past 30 years or so, the system has been quite profitable. It's pretty volatile. It does have some pretty major down months, but every year pretty much, besides 2 years and the current year, which isn't over yet, were losses. So we had 2, maybe 3 losing years over the past 30 years with a reasonable return. Pretty big year here in 1999. It's obviously during the tech crash. There's probably a lot of mean reversion happening and sell-offs around this period. So it does pretty well during a sell-off market. Let's look at 2018, 2019. It did okay. Did okay the past couple of years. This is a single run back test, so you can't depend on this data too much, but it gives us a fair idea of 20% max drawdown. If we ran a few Monte Carlo tests and added some more parameters and filters, this might be a pretty profitable and acceptable system to trade. So before I wrap up this video, I just want to mention one last thing in relation to one of the potential risks when using limit orders to enter your trades. It's important that you guys are aware that the use of limit orders introduces the potential for selection bias. Now, selection bias is a sneaky risk that not many traders understand until they've been burned by it through experience. But selection bias basically manifests itself in real-time trading. You may get very different results in real time than you did on historical price data due to the fact that the system generates lots of variations of signals when you use limit orders. So even when we're using leverage or margin, depending on the quantity of signals that gets generated by your system, there will be times when your system generates more signals than you can actually execute due to capital limitations or not having enough money. So if your system generates 100 buy limit orders for the next day, you're not going to get filled on all 100 of those, and you're not going to know ahead of time which ones will get filled and which ones won't. That introduces selection bias, because now either you have to choose which limit orders to place, which is the classic definition of selection bias, or your system basically just has a random selection based on whichever stocks fill your limit orders first. When backtesting on a daily time frame, unless you have access to intraday price data for the past 30 plus years, and you can run your system and detect which limit orders were filled first, you kind of have this issue. Now, there are several ways you can mitigate the issue of selection bias, which I'll probably cover in a future video, because this video is already long enough, and it's not just a problem related to this particular system, but it affects all systems that generate lots of signals. See how this performed on Bitcoin. Not great. Profitable, but not great. Anyway, the main ways that I know to mitigate selection bias is to increase the sophistication of your signal generation to reduce the signal quantity. So your system will just produce less signals to trade based on having more sophisticated entry criteria. Now, this is not ideal and not always suitable for all strategies, as generally speaking, when it comes to trading, simple is better. But depending on the system, sometimes simple means you get a ton of signals. So other than increasing the set of conditions required to generate a trading signal, my 2 favorite methods are to introduce signal ranking into the system. So for example, you might take the rate of change as a percentage over the past 100 bars and only take the top 10 trades ranked by that metric. So if your system generates 100 trades, you only take the 10 that had the highest rate of change over the past 100 bars, or in other words, the strongest trending stocks over that sample size. Doesn't necessarily mean that the trades are more likely to win, but it does reduce the subjectivity, the discretion involved in which trades to actually execute. And then your real-time results will be closer to the metrics discovered through your backtesting. This method is appropriate and quite powerful for systems where you can actually choose which trades to enter. So trades where you enter on the next bar's open, for example, instead of using a limit order. But for today's system, it's not really appropriate because we don't know ahead of time which limit orders are going to get filled on any given day. So an alternative ranking method might be to only place 10 or 20 limit orders based on a ranking system and how you want to distribute your capital over those 10 or 20 trades and whether you're using margin leverage or not. And then if some of those 10 or 20 limit orders get filled, that's great. If some don't, then you just skip those trades. The negative side effect of this approach is that you might significantly reduce your trading opportunities and exposure, which will result in probably slower equity gains. But the benefit is that you almost entirely eliminate selection bias and your real-time trading results should be much closer to the metrics discovered through your historical backtesting process. Anyway, there are a ton of methods for reducing the damage caused by selection bias, but we'll cover them in a future videos. I could speak on this subject alone for an hour easily. And we haven't even mentioned the plethora of other biases that can pop up when developing systematic strategies like this one that we made today. But anyway, I've kept you and rambled long enough. I'll wrap up this video here. Thanks for watching. As always, I hope you found it interesting and I hope it inspires some ideas for you to go out and test yourself. Please, in the comments section, let me know your thoughts on the system. Let me know what changes you would make to it. If it reminds you of any existing systems. As traders, we often get excited that we've discovered some magic system and then you find out that it was written down in a book 10, 20 years ago and you're basically reinventing the wheel or stealing someone else's idea without realizing it. That's a problem with music as well, by the way. I used to write songs years ago and get all excited that I'd found this awesome melody and then realize a couple days later that I just ripped off a song that was in my subconscious or something. But anyway, thanks for watching. Good luck with your trading as always. If you want to learn more about PineScript or steal my best code, go to pinescriptmastery.com. You can find my courses there, including a course where I give the source code to every script I've ever created, including several trading systems that I use to trade the Forex, crypto, and stock markets profitably. With all that said, I will see you in the next video. Take care and have a great weekend.